More trouble for Southern California's IndyMac Bank. For the second day in a row, angry customers lining up to demand their money. So what should you do with your money?
A lot of people are asking that very question tonight. Chip Yost in the newsroom with some answers, Chip.
Yeah, Leela and Emmett, the FDIC has a watch list of about 90 troubled banks that it may have to take control of if their financial woes get much worse. If that happens, some of you may soon be facing some of the same problems IndyMac customers have been dealing with.
With the talk of a possible banking crisis spreading beyond IndyMac, many people are worried. Certified public accountant Ernest Howard is hearing from many of them, but not necessarily the ones he should be hearing from.
Some of the ones that should be calling aren't.
To understand who should and shouldn't be worried, you first need to know the basics. At federally insured banks, the FDIC will insure accounts with up to $100,000. If you're married and have a joint account, that becomes $200,000. And if your money at a federally insured bank is in certain retirement funds like an IRA, the covered amount goes up to $250,000. If you have more than those minimum amounts, it may be time to think about spreading your money out.
The hyper-conservative approach would be to say, always break up your accounts among very solid, well-capitalized banks and not get too much above the insured limits at any particular bank.
But if you're below those minimums, Howard says to, quote, chill out.
The wonderful thing about FDIC insurance is you don't have to make a claim. It's automatic. And that's a pretty wonderful thing, so that if you have less than $100,000 in a bank and it's an insured account, relax, don't go stand in line, don't sweat the small stuff.
But one area where all this gets a little tricky is in pooled retirement accounts, where a company may have millions of dollars of money due to hundreds of employees.
If their bulk pooled amounts and they're at a bank, may only be insured to a bulk total of $250,000. And if you've got lots of people in there and millions of dollars in assets, that could be a substantial loss.
Of course, there are other insurance plans for pensions, but that's more headaches and rules you would have to navigate to see how it applies to you. As for the FDIC, if you still have more questions about what it is and what it does and what it stands for, you can find more answers online. FDIC stands for Federal Insurance Deposit Corporation, and you can go to its website and learn a lot more about how all of this may apply to you. Also, we have a lot of information about this at ktla.com. Emmett and Leela.
All right, Chip, thank you very much for that.